Hi, I'm Everett, Client Advice Manager and Chair of the Residential Investment Committee at Momentum Wealth. Today I'm going to talk about a topic that's been quite relevant recently, which is how we use property data and statistics when we're making a buying decision. There's no doubt that property data has become more available and more helpful in recent years, as it helps us to understand the property market and dissect what's happening before we make a decision about our next home or investment property. However, it can be a minefield for buyers who don't understand the context of the data they're being provided or which indicators are going to be the most helpful for them. Today we're going to look at 4 common mistakes that home buyers and investors make when they're using property data and statistics to inform their next purchase. The first mistake we're going to have a look at is looking at the wrong market indicators to inform our buying decisions. Property data is a really helpful tool for helping us to understand what's been happening in a property market over a period of time, and most indicators that we see published are actually historical indicators. Price growth is a really good example of this, and I know it's a statistic that a lot of buyers wait for before they have the confidence to buy their next property. The problem with waiting for price growth is that reflects activity that's been happening for the last 6 or 12 months, not what's coming next in a local area. And so often we see leading indicators of a market heating up long before we see that translated into price growth. For example, we might see lower stock on market, we might see less approvals or less new stock entering a market. We'll certainly see lower days on market, properties selling more quickly. And we'll see things like higher online views tracked by online real estate websites and other published marketing sources. When we start to see these leading statistics, that gives us a perspective on a market that's heating up. And of course, our buyers agents out looking at properties week to week are noticing compatible trends with the number of people at home opens and activity on the ground. The problem with waiting for the property price growth to go up is that the market's been heating up in the background this whole time. And so by the time you might arrive in the market, you arrive to less stock to choose from, more buyers who are competing for those same properties, ultimately paying a high price. Not only that, you might find that you've arrived at a time the market's already overheated or has passed its peak, and you miss out on the very price growth that you were hoping to achieve. So our advice is, when you're considering using statistics or you see a published statistic, just ask yourself, does this statistic relate to a historical event? Does this relate to activity that's been happening in the market over the last 6 or 12 months? Or is this an indicator of activity that's still to come? And that will help you to use that statistic in a helpful way to drive your next decision. The next mistake I'd like to talk about is focusing only on headline market figures. Now, most property market publishing houses will have one headline figure that they publish. It might be a price growth index, or it could be something like the median price. And that makes for good media, and we all like to watch it, whether it's gone up or down. But unfortunately, it doesn't tell us everything that we need to know about that market. The truth is, there's no such thing as one city-wide, or certainly one Australia-wide property market. Every city is broken up into different market segments, sometimes by locations, could also be by price point, and even by the type of property that you're considering buying. And each of these segments is moving at different times and is driven by different demand and supply factors. And so when we see a median house or a price index going up, there could be market segments in that city that are declining. Likewise, when we've seen prices go down, there are still areas that are performing well or even showing signs of growth and recovery long ahead of the rest of the market. So when you're looking at a headline figure, make sure that you dig a little bit deeper to look at the suburb level, the street level, and even the property level to consider how it applies to the property you're considering purchasing. Which takes us to our next common mistake. The next mistake that we'll cover is forgetting about property market composition. Now, what that means is that the property market and sales history is made up of lots of individual transactions, and all of those transactions go into the melting pot that form a particular statistic, for example, a median sale price. So if you're looking at a local suburb and you see that the median sales price has gone up, that could mean that buyers are paying more for properties in that area than they were previously. However, it could also mean they're buying different types of properties. there might have been sales of a lot of rebuilt properties, and brand new houses will command a higher price than an older house in the same location. Or it could be that it's mainly buyers in the higher price end that have been drawn to that suburb for this particular period of time. By the same token, if we see a median house price that's gone down, that just means that the middle sale price of all the sales in that area has been lower. That could also reflect that first home buyers have been very active, who tend to buy cheaper entry-level properties in the same location. Just because the median sales price has gone up or down doesn't mean that every property in that suburb has been affected in the same way. So if you're looking at one statistic, whether it's median house price or another published property statistic, dig a little bit deeper to see what else you can find out about the buying activity, the property sales, and particularly the composition of houses sold in that local area for the period of time in question. Once you understand the context and the mix of property sales that's gone in to influence that property statistic, it becomes a lot easier to use that data to inform your buying decision in a helpful way. Now, the last mistake we'd like to talk about might be a surprising one, and that is relying too much or only on data. Now, we love property data and all the ways that it helps us to make an informed decision. But ultimately, only 6% of Australian properties change hands in any calendar year. And so that's a really small sample size to use to make decisions about how the property market is performing. It also can't tell us what's coming in the future. It doesn't take into consideration things like new infrastructure, changes in demographics, new buying activities or lifestyle drivers that are happening in an area. And so there are some aspects of property growth and buyer behaviour that sit outside the published data that's most readily available to us. The other limitation of property data is it doesn't know you and your personal circumstances. This might be a good time for you to buy based on your income and your family situation and your other goals. Or, regardless of what's happening in the property market, this might be the wrong time for you to be taking on a new commitment and buying another property. And so as helpful as property data is, and I hope that these insights have helped you find new ways to use data in your buying decision, it needs to be considered in the context of your own personal needs and in conjunction with other information that you gain from either published research or from a property advisor to help you make the most informed decision that's right for where you are on your stage of your journey. Thanks for joining us. I hope you found this information helpful today as you prepare for your next property purchase. There are many market indicators and growth factors that need to be considered when making a decision to buy a home or investment property. So if you're considering your next purchase and you'd like some advice, our team would love to help you. Give us a call or visit us at momentumwealth.com.au.